In this AMT Insight, I'll be discussing how China's aggressive actions to tackle energy shortages have weighed very substantially on base metals pricing since mid-October. Now, China has been grappling with an energy shortage of which a major driver has been insufficient availability of thermal coal. Now, domestic coal prices in China hit a peak in mid-October, and Beijing has really come in and reacted quite aggressively to that. So they've been cracking down on hoarding and financial speculation. They've considered a cap on coal prices at around a quarter of that peak price that you saw in the middle of October. And they've really been maximising coal production, trying to boost imports. They've been saying to domestic miners, you can exceed your quotas, we're not going to be regulating you as strictly, really produce as much as you can to try and get us out of this mess. And it's been quite successful. So you've seen coal prices decline accordingly quite sharply. The acute significant energy shortages seen across many provinces in China has eased, and coal-fired power plants have been able to replenish stockpiles from critical levels. So more optimism about the availability of stocks to get them through the winter months. Now, from this chart, you can see that industrial metal prices have quite clearly followed coal prices sharply lower. Energy shortages in China and elsewhere have been a very important price driver for base metals recently. You had the power rationing of smelters in China had curbed production quite significantly, and there's particular focus on aluminium in China, and you've had zinc in Europe where they've been concerned about high power prices, for example. And now the implication is that lower coal prices in China will mean lower costs for domestic producers, and also perhaps some easing of power rationing measures from the strict levels that we've seen in recent months. So perhaps greater supply than what had been anticipated, although we obviously still have this issue of energy availability still going to persist. It might also mean less desperation from China for energy imports, so it could provide a bit more relief than what perhaps was expected before to power markets elsewhere, places like Europe and India. And I think if we talk about which prices for industrial metals have been impacted more, it's really been aluminium and zinc. Those are the two where supply have been perhaps harder hit over the last few months by the shortage of energy and the high cost of energy, which is associated with the production processes for those two metals. Now, the other key driver I think that's really weighed on base metal prices has been the impact of energy curbs and higher energy costs on metals demand, and that's become a little bit more visible. If you look at industrial activity, so China's official PMI data showed a deepening contraction of manufacturing activity in October, although the Caixin measure suggested perhaps the smaller manufacturers fared a little bit better. China's GDP growth also slowed to 4.9% in Q3, which was below expectations, and JP Morgan is forecasting a further fall to 4% year on year in Q4, which is, I think, its fifth revision lower. So alongside this kind of impact of energy shortages, you've also got China's property sector slowdown. That's kind of an ongoing issue at the moment, and they've obviously got the debt issues in that sector, and also the more recent widespread COVID outbreak in the country to more than half of the provinces, and the measures in response to that, because of China's ongoing zero COVID approach, are also likely to weigh a little bit on growth, economic activity, and perhaps metals demand too. I think the other key message, I guess, to take away from the last few weeks and this theme really has been that China has, in the last couple of years, made significant steps to up its decarbonisation commitments and take actions to that effect. However, I think its recent action to maximise coal production has very much run counter to those efforts. I don't think it can be taken as an abandonment of China's long-term decarbonisation goals, but it does suggest that these periods of economic uncertainty and perhaps threats to economic stability, China is always going to prioritise that over these decarbonisation goals. So there's a risk that you've got these other policies that perhaps like the aluminium smelter capacity cap that could potentially prove less rigid in the future if that was, for example, an issue in the future related to future economic distress. So there's lots of potential now or more understanding that China could perhaps be more flexible with its existing policies if there is an economic need to do so. So in conclusion, I think we've obviously seen that China's coal prices have collapsed quite substantially, and that has eased broader concerns about the scale of the potential impact that we're perhaps likely to see from energy shortages in China and elsewhere. I think base metal prices have quite understandably declined because of this, as the implication is that perhaps the supply is not going to be restricted as much as we perhaps thought. And also you perhaps seen the demand impact of some of these power curves coming through a little bit more in the data as well, the economic data. So that's weighed on prices too. And then you've also got the broader economic risks like China's property sector and COVID resurgence that have been factors. However, I think relative to the power availability issue, it's the key thing really here is that we still have many months of winter ahead of us. I think power availability and power rationing is set to continue over these winter months. And I think it's really very much a key thing to keep your eye on in the base metal space, at least through to Q2 2022 when those issues might start easing a little bit. But for now, very much a key base metals price driver. And we've seen that clearly in the last couple of weeks. Now, thank you very much for listening to this edition of AMT Insights. I'd really encourage you, if you haven't already done so, to follow AMT on LinkedIn. That'll keep you up to date on any new insights, videos, analysis that we're putting out. Thanks a lot.